On today's episode of Murder, She Wrote, you can kind of see the absolute annihilation that's happening in the stock market. And so in today's video, we're going to go over everything, all of the different economic news that came out today, what's going on with the stock market, and what in God's name is going on with the continued crypto drama. Let's go ahead and get right into this video. So first off, guys, did you guys really not see this coming? I mean, come on. Like, we're in a bear market. Like, is this really a shock? Like I've been saying for the longest, Bitcoin is going to go to 10 to 11K, and now it is sitting under 19,000 last time I checked. It might have came back. Okay, yeah, it came back. Oh, nope. It's still under 19,000. So that's scary. Not only did Bitcoin go under 20K, it just whoosh, it went under 19,000. And like I said, I know people get so upset when you tell the truth, and it's just so unfortunate, but you know, you got to tell people what they need, what they need to hear, not what they want to hear, what they need to hear. I know that's not good for content. I know people are going to complain and cry and get emotional and unsubscribe and, oh, you won't tell me what I want to hear. But it's like, who cares? You need to hear this because this is the type of things that happen to these people. You get annihilated. So as I said, I stick to my thesis, which I've been saying for a while now. Bitcoin's going to 10K whether you like it or not. And here we go. We're making that next leg down. We scroll over the stocks. The S&P 500. Woo! You know what's crazy, guys? Earlier this week, the S&P 500 was at 3950. It was at 3,950. Today, the dang thing is at 3750. That's a whole 200 points. Like, holy moly, you know, like this is a bear market, you know, and I don't know what else I can say that's going to get it through you all's head that this is what a bear market feels like. You get these little sharp rallies and then back to the murder she wrote. So now let's go ahead and look at some news. According to a source, FTX walked away from a deal with Celsius after finding out that the crypto lender has a $2 billion hole in its balance sheet. What does this mean? Well, guys, that means that Celsius is so bad of a company. They screwed their finances up so bad. They are so deeply in a hole that even the company that was willing to buy them as they were going under doesn't even want to take that chance anymore. That's how bad Celsius has screwed things up. U.S. savings rate. This is stock market news we're talking about now. The U.S. savings rate fell to the lowest since 2008 of April, suggesting that growth in spending will decelerate. So you have that. Onward to more news. And so you actually got a new note today that came out from Bank of America. Bank of America said that their crypto users shrunk by 50% during this entire bear market. So basically from the beginning of the year, which is basically when the bear market started in crypto, as well as probably stocks, you could argue. They also said that crypto comprises less than 1% of U.S. household financial assets. Now, we all know in 2021, that number was much, much higher. So the fact that it's only 1% now is actually very interesting. So they also said that sentiment towards cryptocurrencies has soured. Now, this is according to Bank of America. Now, you could pretty much expect that. It's a bear market and you're dealing with the speculative assets. So can't really say I'm too surprised to see that. Now, here's the big news of the day. This is probably the biggest news of the day. It's actually very scary, but it happened. The Atlanta Fed GDP Now cut Q2 GDP forecast, their Q2 GDP forecast, from 0.3% plus positive to minus 1%. Yes, that is what they did. And if that does indeed occur, if we do indeed get minus 1% in Q2's GDP reading, we will officially have 2 quarters of negative GDP, negative growth, which is the definition of an actual recession. Now, yes, if the Atlanta Fed GDP Now's indicator is correct, if their projection is correct, we will officially be in a recession. Now, remember, people on Wall Street are very torn on this. Some people think we're in a recession now. Some people think we're going to get in 2023. But I'm here to tell you right now, the Atlanta Fed GDP Now is predicting that we are in a recession now. That's what they're saying. They're saying that we're in a recession now. Definitely something you're going to want to pay attention to. Very, very interesting. Here's why you want to pay attention to that, right? Because keep in mind, Fed speakers, you have different Fed speakers who come out every single day. And they continue to say the same thing. They say that the economy is strong and that they do not see a recession. That's what they keep saying. Now, Jerome Powell recently came out and said something a little interesting, a little different, but we'll get to that in a minute. That's in this video too. But for right now, I just want to deal with what has been said in the past. And in the past, and by the past, I mean the last like 4 or 5 months, the Fed has consistently said we do not think we're going to be in a recession. Janet Yellen said she does not think we're going to be in a recession. And the Fed said that they think the economy is strong. If we are indeed in a recession right now, that means the economy is not strong. The economy is weakening. And that's very scary that the Fed doesn't know that if that ends up being the case. And so, like I said, the reason why all of this is so important is because, once again, this will be something else that the Fed is wrong about. And it's important to keep in mind that, remember, the Fed thinks that they're raising interest rates in a strong economy. So if the Fed is wrong, that means that the Fed is raising interest rates in a weaker economy. That ain't good, folks. That ain't good. That's not good at all. Now, the last thing I wanted to address in this video is actually an article I saw in the Wall Street Journal. And actually, well, here's what happened. Jerome Powell is actually mentioned in this article. And what happened was Jerome Powell said in this Wall Street Journal article, actually, let me go ahead and pull it up. Jerome Powell said in this Wall Street Journal article that the Fed must accept higher recession risk in order to combat inflation. Now, that didn't make the headlines as big as it should have, but I am here to highlight that on this channel because that is huge. That's the type of news you as an investor need to pay attention to and find. Let me say this again. Powell says the Fed must accept higher recession risk in order to combat inflation. Let me tell you what that means. That means that Jerome Powell is literally telling you that if the economy has to tank in order for the Fed to get rid of inflation, then so be it. So be it. That's what he says. Read between the lines. He's not directly saying it, but he literally said in the article, the Fed has to accept that higher recession risk could happen as a result of them combating inflation. Meaning, he will do whatever it takes to combat inflation, even if he has to take the economy. He may very well have to tank the economy, and Jerome Powell is telling you in this Wall Street Journal article, so be it. Whatever. Very important for you guys to pay attention to. So now what am I doing? Well, the S&P 500 went to 3,700. And yeah, I nibbled. Yep, I nibbled. Don't care what people think. It's my portfolio. Do I think we're probably going to go lower? Yeah, probably. But for me, there are some stocks that are bargains right now. There are some stocks that are deals. So I bought. Found stocks that I love. Came to reasonable valuations. Put a little bit more cash to work. Now, remember, I still have plenty of cash on the sideline. So if if the S&P did something crazy like go to 3,100, I got plenty of cash on the sidelines to buy the dip. So I'm good. Remember, when you are buying stocks, you never want to buy at once. You want to slowly ease your way into it. Especially in this environment. In a bear market, you definitely want to be very careful because nobody knows where the bottom is. But one thing I can tell you is when S&P goes to 3,700, some of these stocks go to prices I like, I strike. And that's what I did today. I did go ahead and nibble a little bit. So there's that. And in terms of Bitcoin, let's talk about that. I strongly think Bitcoin will go to 10K. Now, I'll tell you guys the truth. If Bitcoin goes to 11 to 13K, I'll start nibbling. Bitcoin goes to 11 to 13K. I will be buying more. I will be buying Bitcoin. Remember, I don't own any right now. I will be buying Bitcoin. And I do think that Bitcoin could probably go to 10K and probably go lower. It may not stay there very long, but I think it'll hit it. And if it does, I will be buying at that price. So there you guys have it. Hopefully this video was clear, concise, straight to the point, all that good jazz. And yeah, there you guys have it. That'll go and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe. And I will see you guys in the next one.